Hello, and welcome to yet another episode of the Diary of a Lawyer. And today I want to just briefly cover the developing story regarding Nasdaq apparently halting the crypto coin custody plan due to the crackdown, what is regarded or classified as crackdown by regulators. Now, Nasdaq is reported to have halted plans to launch a cryptocurrency service in the latest sign that the US regulatory crackdown is causing mainstream financial firms to hesitate before forging deeper links with the digital assets industry. Now, the tech-focused exchange operator has been a leader among established financial markets in trying to develop a crypto offering for institutional clients, according to reports by financial specialists, papers, media like the Financial Times. The Financial Times goes on to say that it cited their regulatory uncertainty, which were cited as the reasons for shelving plans to offer custody services for crypto, which had been central to the digital assets division it launched in September. Quotes attributed to the spokesperson or the chief executive of Nasdaq, according to the Financial Times, indicate that they like to operate in environments that have a pretty well-known regulatory underpinning. And he's quoted on going on to say that that's just where they're comfortable, and the fundamental opportunity changed over the last several months, and then the regulatory overhang changed as well, and therefore that just made sense that it's not the right time, according to comments attributed to the Nasdaq boss. There are other observations that in recent months, U.S. regulators, led by Gary Gensler, Securities and Exchange Commission, issued what is characterized as a pleas of enforcement actions against several crypto bellwethers, including Nasdaq-listed exchange Coinbase and Binance, the largest crypto exchange in the world. The Financial Times describes Binance as having clashed with the Commodity Futures Trading Commission, which accused it of allegedly illegally accessing US customers back in March. The chair of the digital assets financial services firm, one of them called a firm called Marex, is reported to have said that this shows how the shadow of the SEC's crackdown on crypto is weighing down on the industry and impacting businesses, prompting them to think twice. Now, following last year's unprecedented crypto market crash, the safety of customer assets was thrust into the spotlight after the collapse of exchange FTX and lender Celsius left investors waiting in line at bankruptcy court. According to Charlie Cooper, a former chief of staff at the CFTC, he's reported to have said that the Nasdaq decision is a major setback for two reasons. And first, that the industry needs credible custodians. Nasdaq is a household name with respect to regulators. And if they're throwing in the towel, imagine how difficult it will be for lesser players trying to set up custody services of their own, which is a point of concern. Now, apparently Nasdaq had planned to custody client holdings of Bitcoin either by the end of June, joining BNY Mellon and fund manager Fidelity in offering safekeeping services. Now, Friedman added that the exchange's focus now would be helping clients with potential exchange-traded funds linked to crypto assets. Fund managers, including BlackRock, are working on winning approval for ETFs based on the spot price of Bitcoin, something that the SEC has previously rejected because of a lack of regulatory supervision of the underlying assets. And so that sort of is a roundup of the what appears to be developing story regarding Nasdaq having stopped a crypto coin custody plan because of the ensuing apparent crackdown by regulators following the collapse of crypto exchanges, FTX, last year, which was based in the Bahamas. And so there we shall leave it on this episode of the Diary of a Lawyer, and we shall speak again. Thank you. Thanks for listening. Bye.